Greetings, everyone. Welcome back to another episode of our weekly price action based technical analysis series. Today, we are delving into the XAUUSD market structure, and I encourage you to stay tuned in so you don't miss out on the valuable ideas we will be deliberating on today. After grappling with setbacks from last week's trading setup, as you will see in this commentary, facing 3 stop outs before finally recovering all losses on the last trading day, our commitment to the analytical approach paid off with a final and successful breakout at the 2035 level, securing over 550 pips from multiple entries. These setbacks were fueled by uncertainties gripping the market in anticipation of the CPI data, which eventually came in beyond market expectations. Congratulations to everyone who stayed faithful to the analytical approach, and let's prepare ourselves for the new challenges in the coming week. If you missed out on these commentaries in any way and wish to catch up for educational purposes, you can find the link in the description box below or on the top right hand corner of the screen if you are watching on my YouTube channel. Currently, gold's bullish momentum is on the rise, reaching a fresh weekly high above the 2050 amidst escalating geopolitical tensions and declining US Treasury bond yields. Our analysis this week will consider both technical and fundamental perspective, incorporating tools like the economic calendar, trend lines, key levels, and chart patterns to forecast potential price action for the new week. But before we proceed, let me quickly state here that this video is for educational purposes only and not financial advice. I aim to provide insight and enhance your understanding of the XAUUSD price action analysis, but always exercise caution and consider consulting a financial advisor before making any investment decisions. Now, with the groundwork laid, let's dive right into the details. As we shift into the daily chart, the key level from last week's trading setups remains very much intact, serving as a crucial reference point to guide our trading activities for the upcoming week. And of course, for those of you who were with me during my last week trading setup, the 2035 level had played a major role in guiding our trading decisions for last week. And in fact, if we go to as far back as the month of April, that's about an historical data of 8 to 10 months, you will see how this zone has consistently influenced the direction of price action. Look at what happened here in the month of April. We saw how this area was a strong selling niche, the month of May, and then if we fast forward to the month of November, though we saw how price did break out that structure, but you will see traces of how this particular area has a tendency of pushing price action to the downside. Notably, last week Friday, we saw how price action finally broke out of that key level at the 2035. And at this juncture, the question is, will this breakout pave way for new highs, or could it potentially result in a false breakout once again? Now, the significance of this level cannot be overstated, as the reaction of market participants around this area in the coming week will undoubtedly have a significant impact on the direction of price action. Now, going into next week, how do we intend to capitalize on any trading opportunities at this juncture? Well, I've been able to identify a simple setup that we will be using to guide our trading decisions for next week, right on the 4 hours time frame. But before I go into the 4 hours time frame, it's very important that we keep tabs with the fundamental factors that will be affecting the market sentiment for this week. We all understand that by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. And right on the economic calendar, based on the assets on our watch list for this week, we shall be focusing on high impactful event from the US economic docket. Now for this week, the first high impactful event is coming up on Wednesday, that's January 17th, and we have the retail sales data, which is seen as a key economic indicator that measures the total receipt of retail stores representing consumer spending, and its impact on market sentiment is significant as it provides insight into the health of the US economy and consumer confidence, hereby influencing expectations about future economic growth. Then fast forward to Friday, January 19th, we shall be witnessing the publication from the University of Michigan. That's the Consumer Sentiment Index, which gauges the prevailing sentiment and confidence level among consumers, providing valuable insight into potential shifts in economic conditions. Changes in consumer sentiment can influence spending patterns, impacting in various sectors and markets. Now, with the data we have here on the economic calendar, as technical traders, we do understand that the anticipation of this event usually affects the market sentiment, which on the long run will dovetail on the chart as price action. Talking about price action, let's delve into the 4 hours time frame to look at the setup I was able to spot here. Now on the 4 hours time frame, what I did here was to take into consideration the nature of price action since the mid-month of December, and this is what I was able to come up with. A simple setup where we can see how the $2015 and the $2025 area had played a major role in negating all attempt by the sellers to break through the structure in the last 5 to 6 weeks. And for the fact that this area has been a strong demand zone, we kept on looking out for buying opportunities throughout the course of last week. Now our key level still remains very much intact at the $2035 area, and in fact we saw what happened on the last trading day of last week, how price action did break out of the key level, and of course also breaking out of this beautiful descending trend line spotted around this area. Now, as we head into the new week, I will continue to look out for buying opportunities for the fact that price action remains above the demand zone between the 2015 and the 2025 area, broke out the key level at the 2035 level, and of course broke out the descending trend line on the last trading day of last week. So as a result of this, we all know that from a technical standpoint, whenever price action breaks out a trend line like this, we expect that some point in time price may likely come back to retest the trend line that was broken, which interestingly will be sharing a confluence with that demand zone to incite another wave of bullish momentum. So for this week, and coupled with the fundamental factors behind the scenes, I continue to maintain a bullish bias here as long as price action remains above this descending trend line. However, the only condition that will make me feel very much comfortable selling this asset is to see price action take out this demand zone, that is taking out all the buy positions here, by breaking down and retesting the structure to the downside. And in fact, if price can break down the structure, price will be back below the descending trend line to give me much confidence to be part of a downtrend continuation. So for this week, our center of focus is going to be around that key level at the $2035 area, which will be guiding our trading decisions for next week. So at this point, we are going to be looking forward to see how the market participant will be reacting to the structure at the beginning of the week. Are we going to see a retest of the trend line, a retest of the key level, or will price come back into the demand zone before another wave of bullish momentum will happen? Or are we going to be seeing price break down this $2015 area, retest the trend line to incite a downtrend move? So stay tuned and be with me as we navigate this market together at the beginning of the week. Trust me, I will be with you in the comment sections to give you updates after monitoring how participants in the market will be reacting to this current structure during the early hours of next week. If you have found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial too. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.